Hello guys, we have Nick Pedler here with us today. Nicholas has been with us since I think November, October last year. Thank you for coming, Nick. Appreciate it.
Who calls me Nicholas these days?
Awesome. So why don't you start by just telling us a little bit about yourself?
Sure thing. My name's Nick Pedler, 27 years old, Brisbane born and raised, and I work with you as a mortgage broker, or we're using the words lending advisor now.
Yeah.
In-house. So, I started in the business, like you mentioned, so maybe October, November, just before your daughter was born last year, and really enjoying it, loving it every day.
Awesome. And so tell us a little bit about what you were doing before, because I know you're in sales, but I don't know specifically what type of sales. Selling ham or
meat and seafood. Yeah. No, so I finished school in 2015, and like a lot of school graduates, wasn't really sure sort of what I wanted to do, but I had an interest in sort of things and how things work and design things. So I did a semester, I had a gap year. I really wanted to gap year. I wanted to race my bike all around the globe, and I did a couple of cool races and things, but wasn't really a money-making exercise. My parents were like, all right, you got to start doing something. So I did a semester of uni at QUT and did industrial design, and I didn't really like it. It was a lot more artsy, crafty than sort of industrial that I thought it was going to be. So I put that on hold and did another couple of mountain bike world champs and some more races and stuff. But I got picked up by a brand, Specialized Bikes, and they said, "Here's a brand new race bike.
Yeah,
but you've got 12 months to pay for it. So I was like, no, just take it now. Work out what I want to do with it later."
Yeah.
And one of the guys who I knew from the time was like, "Oh man, that's a sweet bike. How are you going to afford that?" He knew I wasn't working or anything, and I said, "Oh mate,
you said it's 12 months.
I've got a year to work it out. I'll just take it now and worry about it later." And he kind of knew my parents, and he was a great family friend. And he said, "Oh, how about you come just have a look at this this industrial sales job, and just see if you want to do sort of an internship of an entry level role there." So I thought, "Oh yeah, I'll give it a go and see sort of what it was." So that business, it was a private company, and we were selling process and control valves to mine sites, power stations, explosives manufacturers, oil refineries. So I started there in a internal sales, so just part numbers, prices, doing simple quotes and everything. And I picked it up pretty quick and really enjoyed the physical aspect of it, looking at machinery components and processes. But I got a bit bored of just sitting inside, so I worked my way up to an external sales role.
Yeah.
And I was one of their sales reps there, and I was with that business for about 7 years, up and down the eastern seaboard, and had a heap of clients there. And it was a really good job. I really enjoyed it. But like a lot of businesses, it had its heydays, and I was kind of there on a bit of the downslope, a bit of downslide, and I was doing really good numbers and enjoying it, but a lot of it just wasn't coming back into my way, back to my.
So is that why you decided to get into broking? Why was the reason? Was it more for the sales or the numbers?
I figure like they're completely different industries, but the fundamentals are we're finding clients and business. We're working a product or a solution to their problem, and then taking that through to execution. And it's different industries, different types of products, but there's still that same fundamentals there. And those are all the key pillars and the parts that I enjoyed. So I wanted to do something where I could work for myself and have a bit more flexibility with it instead of working under another business.
So in your previous role, it would have been more business to business.
Correct.
And now this is more business to customers, right?
Correct.
So how have you found that transition now dealing with clients instead of businesses where it's probably more emotionally driven as opposed to commercially driven?
Even though it's a different industry, it's still talking with people, and it's relationship based. And I had some really good clients, and they had to put things out to tender for their regions, and they would still send it to me, even if I was more expensive, longer delivery. But they just liked working with me. So we had really good relationships there, and it's still the same in this industry. It's 100% relationship based. Definitely, it's a little bit more personable, and trying to be really sharp on those personable skills, because, like you mentioned, it's people's personal finances and scenarios, and you can't just blame the block of metal or this piece that's not working. It can be annoying, but you're blaming that versus you've got to be really tactful, and sometimes you can't do something that someone's set their mind on for reason X, Y, and Z, and you've kind of got to be very tactful in how you can deliver that. Delicately and effectively.
Yeah. And then in terms of like your start, right? Because I think I met you when you were just 3 months only into broking. So tell me about how you started, and then the transition to coming to us, the differences, what you learned, what you didn't learn.
I started with a a guy I knew through the cycling circle, and he was a broker. He offered to take me on, which was really, really kind of him. And I wasn't really sure. So yeah, I was very green to the industry and maybe a little bit naive in terms of how hard and how and what is involved in it. And the business was everyone was working from home. So yeah, it was a good start. Gave me some time to do my Cert 4, get everything sort of up to speed. But in terms of that exposure to different scenarios, environments, and learning everything, I wasn't really having a great amount of stuff come across the desk every day. So it was good for a little bit to get my business and set up all the backgrounds, but it wasn't. I really struggled with just that exposure and that learning. So I caught up with you, found Jessie at one of your open homes that she was doing, and
my wife.
That's it. And yeah, she said, "Oh, you can have a chat with Youeil. He's my husband. He's a broker and looking to grow." So and that was just late last year, and you kind of put a good deal forwards, and I really like the culture, the environment, and and how open everyone is. And I think that's something really about broking. And in the last industry, it's very siloed. You're in your business, and no one really talks outside of your suppliers and customers. But here we're all, I guess, competing for deals, but no one's really crossing over toes. Everyone's always happy to give and share and show what they've worked on and other things before. So I really like that in the culture. So it's been amazing. Without word of a lie, the first 5 days had more energy exposure than the first 5 months. It was incredible, and the numbers speak for themselves. I'm definitely not the biggest fish in the pond, but from joining, it was straight away. Just deals started landing, things started rolling, it all started growing from there. And it's been really fun to ride the wave.
And so on that, because I think sometimes, I find at least, when people have a harder start to the industry, and then they're coming over to another business, and you still have to have a slowish start, right? Because you need the momentum to come up. Are there times, or is there deals or things that happen where you realize, hey, this is actually for me, I didn't waste all my time?
I remember my first deal, and when I started, I put on my LinkedIn, I'm a mortgage broker now, and one of my clients at my old job, he was like, "Hey, you were actually really, really helpful as a sales rep there. My partner and I, we actually want to buy our first home together. Can we have a chat?" And I was like, "Oh, I was so nervous. I didn't know anything about it." And
you have to wing it almost.
That's it. But it ended up becoming the first deal that I landed, first deal that I settled, and it was the best deal ever. A super green, easy deposit saved, good earnings. I was like, "Oh, this is the best one ever." And I remember when I got paid for it, it was just before our Christmas party on the boat, and I thought I was a millionaire. I thought I was like Bill Gates, first deal ever. But they've got definitely a lot more exposed to complex scenarios, bridging loans, people with different credit profiles, and it's been a lot harder since then. I think it was just the best first deal to ever have, and you really, I remember getting paid, like, this is the best. I'm a pro. I'm a boss here. This is for me. So having the team and the support, as it's been a little bit more complex and complicated, it's been really, really grateful about that.
I love you say the exposure, right? Because I think that's why I love dealing in real estate, is because you deal with self-employed, PAYG, doctors, dentists, whoever it may be, but you get a lot of exposure to different deals because there's just different people purchasing different homes. So are there particular deals where it kind of blew you away that this is what you can actually do on the finance side, or?
I think the bridging one is definitely and working with the real estate office now, definitely the biggest value add for them, just helping clients make that transition. I can't imagine how scary it'd be to try and just find a property and then line it all up to sell. There's been some working with some accountants and referral partners as well, and helping them with their complex applications. There's a lot of ways to spend money, earn money, and move it around. It's
Is it called skin the cat?
Yeah, a couple different ways. Yeah, dead cat.
Don't know. Awesome, man. So tell me about clients. So tell me about a client you've recently helped that stands out where you almost had to save them from themselves.
Yeah, sure. This is quite a good one. I'm working on it at the moment, so it's kind of spread across this month and next month with their tax scenario. So they got referred to me by a financial planner, and they run a wedding dress shop business, and some highs and lows in the business, and their current home loan, I can see they've been drawing down extra money out of it to put into the business, and that was a low doc loan, so quite a less financials put forwards, but it
Yeah.
comes with a higher rate,
Yeah.
higher risk there. So they were paying quite a bit per month with good equity there, and I was like, I'm not sure sort of what was going on. So did a bit of research into it, and all we needed was their 2024 and 2025 notice of assessments, and we found 2 lenders that can just do a very simple self-employed application. We didn't need to delve too deep into the business financials.
Yeah.
And we can refinance their home loan and get them to a much better rate. And the deal we're working on with a financial planner, he's actually going to get them to sell a whole bunch of their shares down
Yeah.
and pay down this high rates owner-occupied debt as much as they can. And then I'll be picking the deal up, refinancing across to the low rate lender.
Yeah.
And then we're going to reborrow another. We'll have one owner-occupied loan, and then another investment loan, and we're going to buy back as many of those shares that they sold from
That's
their
tax
portfolio.
deductible.
Correct. So move their tax deductibility and buy back all these shares. Yes, there'll be some capital gains tax to be paid, but overall it works out they'll be over $700 a month better off.
Yeah. And on financial planners, because I know with how the market, I know we're going to go on a bit of a tangent here, but with how the market is moving and less buyers at open homes, how do you feel about financial planners? Do you feel like it's a line of business you should be leaning on more, or accountants, or just double down on what you know?
I think it's definitely really good to spread your networking and your referrals where you can, as different businesses are going to have high and low spots to cover yourself. But financial planners and accountants are one of the most trusted trades out there.
Yeah.
The leads and the business that they've done or referred to me, I found it's always the follow through rate is very, very high because they have a strategy, they have a plan. We can bring a lot of value and say, this is the lenders, this is how it'll work from our side, and go through there. So I always really, really like working with them.
So for a new broker, like I think getting a financial planner 9 months into your career can be a bit daunting, right? So how did you pick up the planner? Like, is there recommendations to kind of approach them?
The guy that I work with, I went and found at a networking group. So I live on the north side of Brisbane here, and there's a Kedron Brook business group, and it's like a very informal, very casual networking.
Not Be Nice, another group.
Yeah, correct. So Kedron Brook business group. So super casual. They meet once a month, and I just had a young bloke there, and he said, "I was just looking to help some few clients," and I just treated him like the best referral partner I could. Every time I got something from a lender that was an update on the industry, if it was trust lending was changing, if it was a new capital gains tax calculator, or this is how this loan structure works, I just kept blasting him with as much info and as much value as I could. Yeah. And as he comes across different scenarios where he thinks this could work or he thinks some value could be added here, we've helped him out and done the deal for their clients.
And I really feel, especially with and I'm not in a B&I group or networking group at the moment, but when I started broking, I felt that's why I got to where I am now today, because with those groups you learn how to sell yourself, how to speak to people, how to do public speaking as well. So my recommendation for anyone who starts in broking, even if you're just dealing with real estate agents, get to a B&I group once a week, every morning, if you can, and then at least it gives you the practice you need. So then when you start to do your sales meetings, you start to pitch yourself to agents and the value provided, you've already had all the practice you need.
100%. And as you go through, you'll meet different people, and some have got a whole team and they're experienced and they know what they're doing, but you get some people that are super green and they need a solicitor. You've got a solicitor in your B&I group that you know well and have a good relationship with. They need someone to do building a pest. There's someone in the B&I group. You can start to refer these people around and surround yourself with a whole team and really elevate your profile and their client experience to the point where they're likely to refer you on to other people because of the
correct. I heard from someone that I think they make about $250,000 from their B&I group a year, which is awesome. Just off the back of having to go one morning a week and then also catch up regularly with your members.
There's definitely an investment, both financial and time wise, but certainly I'm starting to see the dividends paid in the B&I that I'm with, and growing that profile there as well.
So I was going to talk about interest rates, but obviously now with the budget,
that's boring conversation. That's
boring conversation. No, we don't have to delve into it, but surface level, how do you feel about it? Do you think it's all doom and gloom?
Definitely, like on the ground, I think a lot of people at the moment are and we talk in the office, our open homes, and what we're going out to on the weekend, and definitely the numbers have dropped off. I think budget one, interest rates being we had 3 hikes this year, and just on Tuesday it was another hold.
Yeah.
Thankfully.
Yeah.
But look, it is what it is.
Yeah.
I think that's the best thing as well I've learned from sort of my time as an athlete, and in that sense is don't get too stressed out about the things that you can't control. It is going to be what it is. It's bigger than us. It's bigger than what we can manage. So just work with it the best you can.
Yeah.
Build confidence in your clients the best you can, and just ride out the wave. There's going to be good times. There's going to be bad times.
Yeah. And so when clients are saying to you, "Hey, I want to hold because I'm just a bit uncertain," like, do you have something you say back, or are you kind of agreeing with them? Yeah.
You definitely get some clients in there hesitant. And I think the value in what we do is that it is a free service and it doesn't cost anything to have pre-approval.
Yeah.
And I've had some clients that say, "Hey, look, I know you're a little bit hot and cold, and we've changed plans a couple of times, but let's just get the pre-approval over the line."
Yeah.
It can sit there for 90 days. If you find something, we've got clean conditions. We can make an aggressive offer. We can get the property.
Yeah.
But if you don't need it and it doesn't come through,
Yeah.
there's no harm, no foul. We can renew it for another 90 days with some more pay slips, or we can just let it die.
Yeah.
And keep those options open for them.
And I feel like it's almost just reminding buyers as well, like, why would you not want to buy when there's less competition?
Absolutely. If it went on sale, the home that you wanted to buy was 10% off in February. You'd be all over it.
Correct.
But
correct.
now it's a bit of a turn back. Not like the same people. You can still get these deals, but I'm not sure why everyone's kind of a little bit. It's crazy. Like every industry though, you look at when gold went to the moon, people were lining up outside the billions.
Yeah.
Now it's kind of fallen off a little bit. No one wants to buy it.
Correct.
Crypto's the same.
Correct.
It's a funny, like you got to kind of think inverse.
And then I think as well, like, which is with property, it almost feels like people think short term as well. Like, if you're gonna buy a property today, regardless of where the market is today, or 6 months, 12 months, as long as you keep it for 5-6 years, you're still surely going to make money, especially because there's not enough homes being built.
That's it. And the replacement cost is not getting any cheaper.
Correct. So in terms of when you're dealing with buyers, like, and I think, like you say, because sometimes we are a free service, I feel like buyers are almost like hesitant to come and meet us. I don't know why, but do you find there's misconceptions, like in terms of borrowing, like that they have when they come and meet you?
Definitely get some people that think they know it all kind of before they go hand, and you've even said it before, clients go on ChatGPT and make themselves an expert, but I try and just get clients into meeting just as low as possible barrier to entry. Just here's a calendar link, tell me a time, we'll book it in, and just go through it on there, and just if you learn something, awesome. If you know it all and I didn't teach you anything, 20-30 minutes, you probably want to get back. Don't worry about it.
So do you find, like, in a meeting before, how do clients feel before they meet you and then after they meet you then? Because they're obviously going in with a preconceived idea, because if they've already spoken to a broker, and chances are they have now, with 81% of loans being written by brokers. But is there a preconceived idea before they come meet you and then after?
Yeah, I think it would depend definitely client by client. Definitely had some good ones where met them at open homes and they were a little bit unsure of what they wanted to do, but they had almost pre-approval from the other broker signed, but they just hadn't filled out the forms and said, "Look, do you just want a second opinion? We'll go through it." And I don't know what the other broker did. I don't really ask too many questions on it. I say, "This is how I do it, structured like this," and I draw it out on the whiteboard on a video call so they can see exactly what it will look like, how the lines connect, what it all means. Balance the offset to show them that you can get this money out now for your deposit, and it doesn't cost you anything only until you use it. And had some clients, and I was pretty proud of myself. Like, only a couple months into the industry, really taking deals from other brokers, and even clients that have told me, we looked at another broker beforehand, but weren't really too sure of it. We felt like you explained it better. That feels awesome.
So on that, because you have been in the industry for less than 12 months, right? How are you finding you are winning your deals? Like, is it a secret sauce? Is it working harder? Because I think that is, in this market we're in now, and I mentioned it before, like 4 in 5 loans now are written by brokers. So how do you differentiate yourself as a new broker?
Definitely just communication and sort of how open you are to share everything, and just making yourself available for other people. I know my girlfriend's probably not too happy about the 8 p.m. meetings that we do, but families are probably my biggest client base, especially sort of in the western suburbs where my office is. And they want to take the kids to sport, to swimming, to bed, get them dinner and everything in the afternoon. So doing those late meetings really helps them out, and just gets a time where they can be settled and go through it, and then that full transparency, full open. This is what we're going to do, and it might not be the perfect scenario for now, but it will get you into the door to this property.
Yeah.
And then in 12 months, we can use 1% refinance buffer. We can cut 1.5% off your interest rate. Repayments will go down to this, and that's our long-term strategy.
Yeah. So fast forward 12 months. What opportunities do you reckon there are for buyers, investors, mums and dads that you deal with now?
Geez, 12 months feels like it's not that long a time, but it feels like to forecast that way out. I still feel like there's a lot of unknowns. I think the craziest opportunity could be that if this negative gearing and capital gains tax bill doesn't pass through the Senate and it gets hit and it doesn't get put into legislation. I think the rebound and the numbers on the ground of people that saw what we almost lost and that ability to grow and that borrowing power. So what we almost lost will be astronomical, and the rebound could be ridiculous. But we don't know too much of it.
Yeah.
Just
do you mean if it doesn't go through?
If it doesn't go through,
well, this is going live after, so we'll find out. Yeah.
But I think that could be an incredible opportunity. But outside of that, look, Australian, and we had a meeting with one of our lenders a couple of weeks back, and in uncertain times, which is kind of what we are globally, a lot of war, a lot of conflict going on. Money is always going to go to stable assets. We saw for gold, and I think Australia as a country, definitely not perfect, but what are the chances of riots in the street, governments overthrowing? Very minimal. It's quite safe. It's a first world country. I think people are still going to want to invest and grow property and developments in Australia. It's an incredible
so even
place
if the budget goes through, you mean?
Even if it goes through, I think there's still going to be a very high underlying value in Australian property, and people that want to buy and invest in there, even if it's not specifically for investment purposes, but to buy their own occupied home there. I think we'll still see demand and growth for it.
Maybe it just might be a little lull.
Just a bit of a lull now.
Yeah, I agree. All right, awesome. So rapid fire questions. One thing every borrower should do before applying for a loan.
Talk to a broker and close out all their bad debts. Talk to me, not him. Talk to me and close out. Keep an eye on all those bad debts. I think we've seen a few of the. I don't know if we can say it. The Latitude credit cards. It's there, and then all of a sudden they introduce a fee. And you don't use it, and then you get a 1 on a credit profile, and then a 2, and all of a sudden our super green, our cleanest options go down. So definitely maybe do a bit of a tidy up, bit of a spring clean through the accounts and work out where everything is.
Yeah, and I think that's such a big thing at the moment. Like we just had a deal where it's services really easy with Macquarie. There's 1s and 2s where you ask the client and they explain to you, and then you can see that they have their cash, but it's still an issue for the bank.
Correct.
And it's just because they don't know until they apply for a loan.
That's it. Even for first-time buyers as well, we'd love to talk to you as early as we can. Even if it's a 3, 4, 5 year thing, we can say, hey, look, you can put extra money into a superannuation account now.
Correct.
There's some tax advantages for it.
Yeah.
But you've got all this funds here sitting in a way where it's quarantined money. You can't spend it impulsively. Yeah. It's put aside. And then when you do want to buy that first home for yourself, you can withdraw that, access it, and use it. And
the plan before you actually do it.
That's correct. Getting on top of some good habits and things like that early on can make a big difference to those clients.
So fixed, variable, or split loans? What's your preference?
Fixed is good. Variable is good. Split is good. I mean, it's what you need. I think full variables a bit of a favourite. Just keeps it nice and easy. Straightforward. And if you're going to, especially if the owner occupies difference, what my majority of my loans is just having that extra ability to pay that loan down as quick as you can. Are
you finding a lot of people choosing variable, although with where the market is and the uncertainty?
Definitely either full variable or splits as well. And especially for some of those clients where we need a solution to get them in the door now, but it won't be a solution where they're going to be forever. We just need a year there, a good clean year. Let's go variable, ride the roller coaster, but we can move ourselves later on as our options and scenarios change after that year. So having that flexibility there is good, and then we can look to change in 12 months as we need.
I find at the moment most of mine are split loans. And most of them are probably 50% fixed for 2 years, 50% variable. Just so at least they can hedge their bets. So last one. Where will you be in 5 years?
On the other side, interviewing you. 5 years. It feels like a long time away.
Love that.
Not sure.
Sure. I think you'll be writing 150 million. I think with the start you've had and the resilience. And I always feel like with broking, the worse the start you have at the start, and if you can get through it, the better you'll be built for a tougher and better market.
Definitely comment from day one. Is rough.
It
Rough.
is
Watching that savings account just drop.
but I feel I always say like people who can suffer when they start will always be better for it after. So have no doubt in my mind you'll be interviewing me in 5 years' time. Awesome. Thank you guys. Really appreciate you tuning in. Like and follow us and just reach out if you have any questions.